Super week. Thanks very much for coming out tonight. It's been an awesome few events we've had so far, and looking forward to tonight's event. So you can follow the Block Party One Melbourne events on social media. So we have a Facebook page where we're actually streaming this live on Facebook tonight, and also you can see Monday night's Bitcoin Blockchain 101, Tuesday night's Ethereum and the Alter presentations as well. Lots of content last night. It went on for about 2 hours, but the presentations were world class. It was really good content for anyone that's interested in learning about alternative currencies. So we also have a Twitter account, so please follow us on Twitter. It's @BlockchainCTR. We have an Instagram account, which is Blockchain Center, and we're also on LinkedIn. And we also have a talk and trade group on WeChat as well. So who here uses WeChat, just out of interest? Who's got an account on WeChat? Okay, about 50%. So yeah, so WeChat is a really good application. It's got loads of cool features to it. So if you want to take a photo of that QR code now, or if you want to scan it with your WeChat application, then you can join the talk and trade group. How many members are we up to now, Will? 94. Thanks for that, Will. You've changed your voice, Will. So you're welcome to join our talk and trade group, and lots of discussion happening there all the time. Okay, so I should introduce myself. My name is Martin Davidson. I'm the CEO and Global Director for Blockchain Center. Blockchain Center is a co-working space. It's a not-for-profit focused on education, co-working and community events. And we've been going since November 2014. And had loads of community events, lots of Bitcoin blockchain startups. There's some really cool businesses there, really innovative businesses, and really successful startups as well. What we've been doing is quite unique in the industry, so much so that we're now doing a global expansion, and we've been approached by many different cities around the world to open up a blockchain center. The first of which is going to be in Kuala Lumpur, in partnership with the NEM Foundation. And that's opening very soon, and we're also opening a centre in Shanghai, but we do have plans to open them in other locations very soon as well. If you do have a startup, or you are looking for a co-working space, preferably focused on Bitcoin and blockchain technology, then you can come in for free on a Monday and grab a desk and get a feel for the environment, but you also can join as a full-time member. So we have out of interest, who's been to the Blockchain Center before? Show of hands? Okay, about 50%. So it's quite a unique space. It's got some custom artwork. We've got an event space. We've got a games room. We've got an outside barbecue balcony area, a podcast studio, some meeting rooms. So yeah, it's quite a unique experience people have. We also have the world's only Bitcoin mining museum as well, where you can actually see old versions of the hardware. And we actually have a full node as well, which has a full copy of the Bitcoin blockchain on it. So it's quite an educational experience people have when they visit the Blockchain Center. And these are our rates to become a co-working member there. So we hot desking for a day is $30. Full-time rate is $350. And all co-working members get access to unlimited coffee, which is supplied by Monochrome Coffee, which is a sustainable enterprise helping Tanzanian farmers in Africa there. So, awesome coffee. So we're rapidly expanding community. We've actually got 3,000 members of the blockchain community across Melbourne, across a few different meetup groups. And the main value that people or startups get by coming to the Blockchain Center is the access to the network that we have, which is now global, in addition to all of the community and the educational events that we have quite often as well. So if you're not a member of these meetup pages, please do join. We've got the Blockchain Center, which is more focused on location-specific events. Blockchain Melbourne, which I co-organise with Alan Sen and a couple of other community members. Those events tend to happen not just at the Blockchain Center, but around Melbourne. And the Hyperledger Melbourne meetup group, where we've had 2 previous speakers from IBM, and they were so successful that we actually had the last one here, had 250 people. attend the event with Nitin Gore, who's the Global Director for IBM Blockchain Labs. So that was a really, really awesome event. So this is the first time that we've done these series of events, this Block Party 1, and we've actually just like to say a couple of words about our sponsors who have helped to make these events possible. So first of all is CoinStop. So the CoinStop guys are actually here today. So just if you want to put your hands up, guys. Yeah, CoinStop guys. Excellent. So yeah, so they are Australia's leading cryptocurrency hardware wallet provider, authorised resellers of both Ledger and Trezor, two of the leading hardware wallet manufacturers in the world. So you can visit their website, coinstop.com.au. So out of interest, who has cryptocurrency here? Who owns cryptocurrency? A lot of people. And who has a hardware wallet to secure them? Maybe half as much. Cool. So those of you that don't have a hardware wallet and you do have cryptocurrency, you need to consider about how to secure that cryptocurrency, because obviously you wouldn't want to lose it or it to get hacked. Now the CoinStop guys have actually just came to me earlier, and they sort of very kindly offered to help out with our fundraising efforts this week by auctioning off a Trezor hardware wallet. So it's arguably the world's best hardware wallet. This is a limited edition, is it not?
That is correct, yeah.
Yeah, cool. And what's the AUD retail value of one of these?
$150.
$150, excellent. So after the presentation tonight, we'll do an open auction, which will be a bit of fun, and then the proceeds will be actually going to our charity partner, the Big Umbrella. So thanks very much for that, really very much appreciated. So you might be able to get yourself a decent value hardware wallet, or if not, you know where the proceeds go. So another sponsor we've got is Indorse. Now Indorse actually did a presentation last night. Who was here last night? Fair few of you. Good stuff. So Indorse is a decentralized professional network powered by Ethereum technology. It's a reliable channel to get your skills endorsed and showcase them, a network that lets you own your data and monetize your activity. So you can check out their website, which is indorse.io. I do believe they're going through an ICO crowdfunding campaign at the moment. Blockchain Global is a leading Australian Bitcoin blockchain investment company, and it's the main corporate sponsor and anchor tenant of Blockchain Centre. So to find out more, you can visit blockchainglobal.com. ACX is Australia's largest liquidity pool and order book of Bitcoins in Australia, and you can visit acx.io. ACX is actual resident business in the Blockchain Centre, and we do actually have flyers for ACX tonight. So if you want to grab a flyer, then when you create an account with ACX, you'll get $10 credited to your account. You can then buy Bitcoins and then send it out to a wallet that you control, preferably a hardware wallet. Cool. So Hcash is a decentralized and open source cross-platform cryptocurrency, and you can visit their website h.cash. They recently did quite a successful ICO campaign, mainly in China, so you can find out more about them. And Norn. So Norn is a new AI-infused smart business system currently under development, and you can find out more information by visiting their website, which is nornear.io. So thanks very much for the sponsors of this week. Cool. Also, thank you very much for your support so far to the Big Umbrella, who's our charity partner. We actually took part in a team building activity just last week outside Flinders Street, and it was a great experience. Justin, who's the founder of Big Umbrella, they've been going for 7 years. Actually, their anniversary is today. He was here last night and did a short talk about the Big Umbrella and the work they do, and you can see on the statistics here what they've done there. Over 104,000 people, homeless people in Australia, they fed over 100,000 meals, 22,500 volunteers, and 218 tonnes of reclaimed food that they've managed to rescue and give out to people in need. So great work that the Big Umbrella do, so you know where your donations are going. And so far this week, on Monday, we raised $400 for the Big Umbrella. Great effort. Yesterday we raised $600, and then today, so we haven't obviously counted up the donations yet, but hopefully we'll have a good result again today. So thanks very much for everybody for donating to the Big Umbrella. Okay, cool. So moving on to the main event of tonight, I can introduce you to Matt Harry, who basically runs the Crypto Traders meetup workshop each month, and also he's one of the organisers of the Talk and Trade, and he's the founder of cloudbreakassets.com. So I'll now hand over the mic to Matt.
Okay. All right, thanks Martin. Nice introduction there. Martin, for those of you that don't know, deserves a bit of a plug himself. He's been quite, shall we say, instrumental in scaling blockchain technology and Bitcoin in the Australian market. Very knowledgeable man, takes a lot of time out of his day to educate people. Also a very good speaker, runs a number of events, so please feel free to come down and attend any of his events because he loves a big crowd. So welcome to the Block Party 1 and the Crypto Traders event. As Martin said, my name's Matt Harry. I run Cloudbreak Asset Management. I'll be one of your hosts for tonight. There's another gentleman, very knowledgeable gentleman, joining me by the name of Tomas Cifuentes. Thomas is a full-time trader and he's managing, probably like a number of yourselves, to be making a full-time living out of the crypto markets. He's going to take you through some live technical analysis examples in the real world on current cryptocurrencies halfway through the talk tonight. So what we'll be looking at is we'll be going through a few basic technical analysis tools. They're not really basic tools, but the way we'll present them tonight will be very basic, some pretty basic knowledge. Keep it fairly simple. Then Thomas will take you through some live examples. We'll have a look at a bit of an exchange comparison. We'll look at 3 or 4 different exchanges for those of you that are currently trading. Go into some information around how you trade altcoins and what's important to look for. And then we'll finish off with the trader mindset and a bit of Q&A. After we finish up here, I think you all probably know, but there's an event back at the Blockchain Centre. Everyone's welcome to come back. The Talk and Trade happens every Wednesday night. We've got a few beers, a few nibbles. Come back, feel free to settle in and enjoy the night. So before we start, I need to give the required disclaimer. So this presentation is for educational purposes only. It is not intended as financial advice. It's always very important to seek independent advice from your own advisors in relation to this type of investment. As we all know, crypto trading is a risky activity. If you look at the monthly volatilities in the crypto markets, you're looking at average between large and small market cap coins, you're looking at an average of double the volatility on a monthly basis compared to yearly volatilities in the traditional currency markets. So extremely risky. Keep your eyes on your fries. So our first technical analysis tool, some of you have probably used this. It's pretty simple. On a basic level, it's pretty simple. Pitchfork analysis, also known as Andrews pitchfork or median line studies. There's a number of different variants like Schiff and inside pitchforks, which we won't go into, but the important thing here is the trend channel, really, to focus on. So the trend line indicator that provides a channel for support and resistance levels. It's based on 3 consecutive peaks and troughs that establish the trend channel. So you can see there in the example chart to the right-hand side, the anchor or the handle is based off the low in the trend, then the forks pivot off the subsequent peak and trough, providing the trend channel. So the outer limits of those trend channels are considered resistance and support. So that's what you're looking to keep an eye on. So the handle establishes the base trend line or median, and the 2 forks place trend channel outer limits, which act as support and resistance levels. Obviously the top line there being, actually we'll go back to the example, the top line being the resistance and the bottom provides support. There are actually other channels inside both of those outer limits, but you can have a look into those separately. The basics really are the outer limits of the channel that you need to be concerned with. So very basic, pretty simple to use, can be quite effective. The support and resistance levels really are just a line in the sand, and they're relevant really only until they're not. So a break of these represents kind of, I guess, an invalidation of the pattern or trend, and potentially entry or exit points of positions. Generally, you like to see those combined with some sort of activity around volume as well. Volume is actually really important in a lot of these type of tools, but something you can probably look into separately as well. So we'll move on to flags and pennants. Two very similar tools. They're both continuation patterns that closely resemble each other, so they really differ only in their shape. The flag is rectangular, as you'll see in a moment, and the pennant is triangular. So they both occur during a consolidation phase after a sharp price movement. So sharp price movement followed by consolidation. Flags and pennants placed after shallow moves are a lot less reliable, so you're really looking for a strong move to put in place your flag or your pennant, and you're looking for a price breakout in the same direction as the initial move. So using the breakouts as good entry or exit points. So if we move first to the flag, I'll give you an example. So you can see that the flag's rectangular in shape, as I mentioned, downward sloping rectangle. The trend channel or parallel lines act as support and resistance until there's a breakout. So much like the pitchfork, the flag provides the outer limits of support and resistance within the trend. It'll generally be in the opposite direction to the initial price move. So the strong up move in this example, you can see there, followed by the consolidation which forms the flag. So the signal's generated when price breaks out of the channel in the same direction as the initial move. If the price breaks out in the opposite direction, it's a bit of an invalidation of the flag as any sort of an indicator, as it's a continuation pattern that we're actually looking for. So that's important to keep in mind. Again, a breakout, preferably on volume, presents the better opportunities. If it's a weak breakout, it's probably not a great opportunity to enter. So very similar to the flag is the pennant. So it's a symmetrical channel where support and resistance lines converge. Again, we're back to the support and resistance levels. If a pennant is tested more than 5 times, it may suggest that there's no actual continuation pattern pending. It may just be that the market's going to trade sideways for a while. So you're really looking for no more than 5 tests of the support and resistance levels. You can see on that one there, there's sort of 1 at the top, 2, 3, 4 at the bottom, and then you see the breakout, which provides a really strong entry level. Again, the initial price movement should be fairly sharp if this pattern's to be relied upon. Some considerations when you're looking at pennants and flags. Generally, both are short-term patterns. They form quicker and easier in downtrends than uptrends. I'm not really sure of what the reasoning is behind this, but I don't know, maybe Thomas can shed a bit of light on that a little bit later during his live analysis. So looking for strong volume on breakouts, as I've been mentioning, to confirm the pattern and the resulting signal. The price target is equal to the move prior to the pattern. So if the prior move was from $10 to $20, the breakout happens through $16, you'd be looking for a move to 26 as a target. So if you go back to this example, so you see there the initial move is from 20 up to about 31. The breakout happens around 30. So you're looking for an 11 unit increase on the breakout. So the breakout happens around 30 or 31 and pretty quickly moves to 40 to 42. So it's a pretty good example of the type of behaviour that we're looking at. Okay, next, this one I don't really use that often. I don't really rely on it that often, but it is widely used, so I thought it probably bears mentioning from a pretty basic perspective. The cup and handle, so it resembles its namesake, pretty simple to use and easy to spot. It's a U-shaped cup, as you can see there in the diagram, slightly downward sloping handle to the right of the cup. The handle will typically have lower volumes and also again provide short-term support and resistance channel that we're looking for a breakout of. Again, a continuation pattern, a bullish continuation pattern. I'm not actually sure if you can use inverted cup and handles, but I haven't seen it, but perhaps you actually can. Okay, so looking at sort of analysing the cup and handle. Selling pressure comes at the highs, which sends the asset into a sideways and down consolidation period. So we go back to the actual diagram there. Cups with longer and more pronounced U-shapes generally provide better signals. You don't want to see a sharp sort of V bottom. It needs to be a nice rounded bottom and a little bit prolonged for it to be a confirmation of an actual cup and handle, which provides some useful guidance as to entry positions. So ideally, again, we're back with volume, should decrease during the sell-off and then increase as we start to see the highs retested. So the volume consideration, which pretty much always comes into play when using technical analysis, and you're looking for a breakout through the handle channel, providing the signal there for entry. So again, similar to the flag and the pennant, the price target should be determined by the difference in price between the bottom of the cup and the breakout point. So in that example, you're looking at 30 up to sort of 39, so you're looking for a 9-unit increase in price on the breakout, which you see there on that particular diagram. So something a little more involved and arguably more useful, divergence. So in order to understand divergence, you really need to understand price momentum first. Fairly simple concept, refers to the direction and magnitude of a price movement. So the steeper and longer movements are considered to have greater momentum. In the diagram there, obviously the top arrow with strong momentum. The flatter and shorter price movements are considered to have weaker momentum, the bottom arrow there in the diagram. So one of the most common momentum indicators is the RSI, or relative strength indicator. So it's a common momentum indicator for measuring price movements. There's other common ones like MACD and stochastics, which you might want to have a look at, but the RSI is a very good one. Primarily it's used to identify overbought and oversold conditions, but it's very useful when combined with price action and other technical analysis tools. So the upswing in price results in an upswing in momentum and vice versa for a downswing. RSI has fixed boundaries between 0 and 100. So if you look at the chart there to the right, you've got the B line, so strong uptrend corresponding to the blue line in the bottom of the chart, an uptrend also in RSI, so there's no divergence there. Similarly with line C, strong downtrend and downward moving relative strength indicator on the bottom line there as well, so no divergence there, no signals to pick up from that. In terms of the actual RSI, the fixed boundaries between 0 and 100, closer to 100 obviously represents an overbought position or strong positive momentum, closer to 0 representing a strong downward momentum or oversold. So potentially on its own, giving you signal to enter, particularly if you can line up momentum indicators across different time frames like your daily, your hourly, your half hourly. If they're all showing at the same time that they're overbought, it might be a good time to sell. So it comes in pretty handy. So how do we use RSI to create value beyond overbought and oversold? This is where divergence actually comes into the picture. So momentum swings will normally be in the same direction as price, as seen there in the top chart with the blue outline. You can see their price is going up, and so too is momentum, or RSI, in the bottom, on the bottom line there in the blue chart. Divergence occurs when momentum moves out of line with price movement. So in the red frame chart there's a good example. You've got price rising and you've got the RSI falling. So you can say that there's divergence there. It suggests a change in direction of the price, but really with one qualifier. And it can suggest a change in direction, but it's commonly translated by traders as something has changed. So at that point, when you see divergence, yeah, it can be used as a signal to enter a long position, for example, or a short position. But really, it's more useful in terms of realising that there's some signals in the market saying that the trend has changed, something's not working like it was, and perhaps it's time to take some profit or trail your stop a little bit higher. So a lot of value in the in divergence. So bearish divergence occurs in an upswing when the price achieves a higher high, but the indicator fails to do so. So if we go back to that previous example, that's a bearish divergence. You've got the higher high on the price in the top chart, the indicator failing to, sorry, in the bottom chart, the indicator failing to register a higher high in momentum. So bullish divergence, obviously the other way around, occurs in a downswing when the price reaches a lower low but the RSI fails to do so. As I said, they're indicators of potential reversal in price or the end of a trend, but more usefully interpreted as something is changing. So the name of the game really at this point is preservation of profits. So just look to take some moves to either lock in or put a stop pretty close to wherever your position's at. There's been some really good recent examples of divergence in the markets that we all love. This one, Bitcoin, from basically right now, early September. You can see there pretty clear bearish divergence. You've got a strong up move. The price is peaking there at 5 grand, so strongly up from around 4.3 or 4.50. But the RSI, the purple line in the bottom half of the chart, has failed to show new highs. So potentially there, bearish divergence, signalling a change in direction, or at least time to perhaps protect the profit that you've earned all the way from 1850, which I'm sure you're all in at 1850 and following it all the way up. So yeah, pretty good recent example on that one. There's another one here on some bullish divergence on Ether USD. When's this one from? Again, really recently. So you've got the lower lows on the downtrend. But you've got bullish divergence in the RSI, again the purple line in the bottom part of the table. Again, it was a pretty good signal as an entry point. We've seen a good rally off there, so they do come in very, very handy. What I might do, because Thomas is here and he loves giving live presentations, he's an absolute gun. My background's in wholesale currency trading in the banking environment. And I can tell you that even the senior currency traders on the wholesale desks just don't use technical analysis on the same level as Thomas. Don't mean to give you too much of a rap and too much pressure before you come up, but I'm sure you'll all find his live analysis very, very useful. So I'll hand over to Thomas for a while here.
Hey guys, my name is Thomas. Thank you so much for your support coming here tonight. As Matt said, I'm really passionate about technical analysis, and I've been trading pretty much full-time for 2 years now. And when I say full-time, it's really 3-4 hours a day. That's my concept of full-time. But in this time from my original investment, then I have attained financial freedom. I probably don't have to work ever again in my lifetime, which is great. And I wish that for everyone. So when we talk about crypto investing, crypto trading, then we're looking for a marriage between strong fundamentals and strong technical analysis. When you conquer these two areas, then you're able to take better decisions and to make better trades. So I'm not going to go through strong fundamentals because I just want to put my attention into technical analysis and continue what Matt was explained before. I mean, there's plenty of amazing projects that are using blockchain, amazing ICOs coming and so forth. But it's not only about you realize, you are aware that you have a good project. It's about where is it in its market cycle. And what it says here is that support and resistance, right? That's the most basic concept of technical analysis. And it doesn't matter if you are a complete newbie, it doesn't matter if you've been trading for a long time. Support and resistance will always be essentials as something as you as a trader you have to conquer and master, because you always trade with support and resistance. So all these patterns, all these support and resistance lines that Matt was showing us before, then they classify under something called the static lines. So these are hard lines that we drew to create levels that could be horizontal lines, triangles, and then we have different ones like Fibonacci retracements and extensions, which are one of the most powerful indicators for cryptocurrency markets. Because you have to understand that the tools of analysis that we have, they can be applied to any markets, commodities, forex, whatever. But when we're dealing with cryptocurrencies, there is a few tools in specific that are better for us for predicting. Like we see so many parabolic movements, vertical movements of price happening every day, and those are like 1,000%, up to 2,000% and more. So that's insane. That's why cryptocurrency markets are the hottest markets to trade. It's great. Anyway, let me put those live analysis now. Awesome. Yeah, so what you're looking here is a platform called Coinigy. A few of you might be familiar with it. There's another one called TradingView. They're both the most popular platforms to do chart analysis. But Coinigy is really cool because it only concentrates on cryptocurrency. So if you have Coinigy here, to your left, you have a series of exchanges and around the world. There's so many, it's countless amount of exchanges. And when you select exchange, then the next column here, you will see all your markets of all your alternative currencies. And I just want to start with Bitcoin on the weekly. One, because Bitcoin is the most, I'm not going to say stable, but it is the cryptocurrency that moves waves. And the markets, there have been correlated from this year, especially. That means that if Bitcoin is going up in price, then the whole market, the altcoin market, is also going up. And it's shown in the last couple of months that when Bitcoin corrects itself, when you have a massive pullback, then the alternative currency markets, they also suffer or they bleed. So it's important to understand where Bitcoin is always in time. So what you see here on the chart, I'm looking at the weekly because that is the most important time frame to look at it. You always have to start from a bigger time frame to a lower time frame. And continuing with the static resistance lines, and as I mentioned before, one of the most popular ones is called the Fibonacci retracement. And with the Fibonacci retracement, you measure from the bottom of a trend to the top of a trend, and then it gives you static levels, right? It gives you static levels of retracement. So there are sweet spots, like the textbooks say that when you have a strong bull trend, you can always expect a retracement back to the 50%. So, and if you look at the chart of Bitcoin, it looks pretty extended, pretty parabolic. It's been pretty an amazing year. So there's a lot of people that ask me, is it a good time to buy Bitcoin now? Like, guys, yeah, we were buying Bitcoin there. So it's a perspective thing, right? This is not about will Bitcoin be a successful technology, because it already is. It's about in time and space, is it a good time to buy Bitcoin? Well, it is, but if you ask me, I would prefer wait for a pullback and buy $1,000 cheaper, right? So yeah, I'm interested on giving people tools and information so they can be smart investors and traders, and then don't chase the hype. So also, the really cool about Fibonacci extensions is they can forecast future price. And that's really attractive for a lot of traders and new people that are into cryptocurrency. They want to know targets. They never trade before. They tell them, what should I buy? What coin should I buy? And then they get that coin, and then what's the plan? Just hold it? Well, that's a very simple, non-smart idea. And then the main question they ask is, which are my targets? So I'm just going to go a bit before in time. I'm going to go to the China bubble on 2013, and then I'm going to put this a tool which is called the trend-based fib extension. So with the trend-based fib extension, we measure from the lower low of a trend to the higher high of a trend minus a third point, which is the pullback. The pullback is how low the price hit in time, and then we extend it. Okay, let's say that we were here in 2015, September, right? So 2 years ago. And we were trying to decide, okay, well, what's Bitcoin gonna go? What price is gonna hit? So with these extensions, then you see these two levels here, and they are very popular levels. It's called the 161 fib extension, which is that parallel. And where did it go? Oops. Anyway, so that's one of the first major level, and the second one is called the 261 fib extensions. So what it's doing is that this indicator, it's projecting into the future fractal price that eventually will be achieved. And then we don't know when. It could take a year, it could take 5 years. It's not giving you a time frame, but it's telling you, hey, if Bitcoin continues its bull run, it will hit that price. So anyway, this is just back testing, but if we're projecting into the future now, we can see that here on May 2017, then the price did hit the 161 level and went all the way here to the 261 level, which acted as a massive support. So the price bounced back there like a magnet, and it fell down to the 161 level before continuing its extension to the massive, which was the other day $5,000, and that gives you a full Fibonacci extension in time. So with that, if you have bought before, then you can have targets on price. And when you're dealing with such a strong and volatile market, it is always important to set targets straight away. That's a part of a trading plan. That's the most basic investment strategies, right? So you need to know in which areas are you going to take profit. It's not about holding, and wait for the best. It's about also taking profit. But I just want you to show you quickly that you can do this with some tools. You can do that with the pitchfork that Matt presented, or you can do this with these Fibonacci extensions. So, so every time you have, let's go to another market. Let's go to Ethereum. So we're going to go to Ethereum, US dollar. Awesome. So we also here on the weekly again, as I say, that's the first starting point. Do you see the average market in a big time frame? Because the bigger the candle, the more information a candle contains, the more information you have. And here it's all about high probability trade setups. So it's putting yourself in the biggest odds before entering a trade. You can't just buy something and flip a coin. That's just gambling. Here you're analyzing all your information, and with all your signals, because all these indicators are giving you signals. You have to take the decision, but you always want to take the decision with your best odds. So you can see here pretty straightforward that you have a whole vertical movement. And that was amazing to witness this year. I bought personally Ethereum when it was 10 Australian dollars, and And then, yeah, when things were going up here, then everyone in the street was saying, oh my God, Ethereum is the best thing. We're all gonna be rich. This is the best technology ever, the ICO frenzy. And then, as a smart investor, you always have to see, so the crowd, the sentiment of the people is saying, buy, we're gonna be rich. And then I'm thinking like, oh shit, I should be selling, right? So we got out the trade. And that's where you have to decide. It's not about if you believe in a technology, if you wanna go long-term or short-term trades. It's about reading the markets. By me selling my whole position of Ethereum doesn't mean I don't believe in Ethereum anymore. It's just I'm waiting for the price to come back because I know how market works. And market works with impulse and corrections, And the correction here is this beautiful flag. Right there, that Matt was explaining. So yeah, so you can wait for this area and buy a breakout and take another trade. I haven't re-entered too hard on Ethereum because I don't know if it's ready to move. But anyway, but this platform, Coinigy or TradingView, will give you all the essential tools and indicators for you to analyze a market and enter with higher probabilities. It looks like a matrix, it looks like paint, but that's where I'm really interested. And then with this, you can just throw everything, you can throw your resistance lines. So it gives you a range, and you can play with the fib retracement to see where the pullback is expected. So I was telling you, it's very common to see a market that has gone through a whole fractal level, including a vertical parabolic movement, to retrace to the 50% Fibonacci. I know a lot of people that they put the buy orders there to re-enter the market, and that's a very smart decision. The market will always pull back to the 50. If it's really bad, it will go to the 61, and some markets will go all the way to the 78. You cannot predict that. Remember that we're not predicting the future. That's a very optimistic way. We're just reading what the market is doing now and then put ourselves in the best odds to trade support and resistance levels. So yeah, so it's definitely tools that you have to explore, and you can, for example, if you did take a trade on that 50% retracement right here, right? You wait for the next candle, you enter the trade on that breakout, and then you have different tools like to analyze the percentage, of how much the market can move in your favor. And for example, if you took the trade there and you're waiting for the all-time high again, then you're doing a 60% play, a 60% move, and then you also have at the bottom your stop loss that can be below that candle there. But yeah, so Coinigy gives you all these tools. They're all not necessary, but they're definitely worth exploring, and it's just a few of them that are really for the crypto markets. But then again, so Martin was explaining about momentum, RSI, and then RSI is pretty simple. If it's in between the 30 and 70 area, in this highlighted area, that's normal trading. That's people buying and selling to a normal level. When the market goes up the 70 into the overbought area, that means that people are buying too fast. And that, if you look at the chart, that's the vertical parabolic movement. So when I see that, that's a strong signal that's saying, man, I have to take profit here. If I'm not taking profit, I'm just being delusional, man. I'm being greedy, and then I have fallen into the mistakes of like, look at it, it's going up like crazy. I'm like 400% in profit, and then next day the whole thing crashes. And yet you are exactly where you started. So everyone has to go through that experience to realize that, oh man, look at my signal, RSI. My field extension is being complete. It's going through all-time high. Man, I'm taking profit there and lock it in. So you need to know this stuff. You need to marry this technical analysis with your strong fundamentals about different projects. And the reality is there are tons and tons of markets. There's a train leaving every day. There are 200% moves pretty much every second day on different markets. And the potential is real. I'm not going to lie to you. You can invest whatever quantity it is, and then I know for a fact that you will achieve big percentage in gains. So there was another market here. I don't know if you guys were paying attention to NIO. Last month, they went through an amazing bull run, and then I sort of missed most of it, but I was following another coin called ADX, which do decentralized ads for Google and Vimeo, and it's had a partnership with NIO. So anyway, we were watching the market. Those first candles, when you see a market, you can't really rely on them because that's when the market just gets listed on the exchange. But when the market starts stabilizing, then you can start throwing your horizontal lines or drawing your triangles and your floor, your support levels. And then, we were watching this range, right? We were watching this range, we were measuring here, and then the market gets tight, the energy compresses, it doesn't want to move. And let me put the volume there, and then suddenly it was like, well, look at this coin, right? So this is how I analyze coin. We have a market that since it got listed, it's been in a downtrend, it's been in a bear trend. And the price hit this low, bounce, fail. Again, attempt to break that same support, fail, again, fail. So that means that people are buying this project at that price in time. So that gave me an indication that might be the floor. Then I go with my fundamental research saying, okay, this ICO is an Ethereum token. Ethereum tokens are probably like very, fashionable, and they're all happening, so many of them. And then I see that the project is about to release new partnerships and all this information that give you an indication of like, wow, something could happen, right? And so that's my favorite. This market hasn't gone through a vertical movement. That's something that is really attractive to me, to my trading style. So we took a trade with a few more people in our Slack room. Down here, and then next, ride the wave. And then if you took the trade in that small gap, which was half price of the original ICO, then in a few days we took 400-500% there, and then we resolved on the pullback, and then we continue to go up. But then you can see something that happens. That's 1,000% in 5 days or something like that. Like, where else do you see this movement? This doesn't happen. So that's something that it's telling you, wow, 1,000% move. I mean, if you put 1 Bitcoin, then you got 10. And that's the game. The game is to multiply your Bitcoin. So so I just leave you with that, and then you want to go through the exchange comparison, Matt? Yeah, so I just give it back to Matt, and then I'll come back a bit later to talk about risk management a little bit.
We'll change this over again, boy. Okay, thanks, Thomas. I told you it was good. Really knows his stuff, and 1,000% gains, winning. Awesome. So we'll move on to a brief exchange comparison because exchanges are important when you're starting out as a trader. You can't trade without exchanges. Many of them, they vary greatly in their level of usability, being a nascent industry. So we'll touch on 3 main ones that you might be looking at, or if you're starting out with trading. So the first one we're looking at here is Poloniex. This is kind of where I started. It's a good access point due to the fact that it's fairly user-friendly, somewhat follow your nose, self-explanatory once you're online. That's a bit of a relative term, really. None of these exchanges are that user-friendly. They're all still a little bit clunky. Most are not really built for your average trader, more for technical people that understand the market a little bit. But given that, Poloniex is relatively user-friendly. Pretty decent fees at 0.25%. You can get lower, but it's on the lower end of the scale. No deposit or withdrawal fees. There can be up to in excess of 5% fees on some of these other exchanges. You've got good access to Tether and Ether pricing, as well as Bitcoin-based pricing. and really good liquidity, $350 million in daily trade volume going through Poloniex. So more than enough for you and I, maybe not enough for Thomas. Good selection also of altcoins without getting too crazy and exotic. I think they've got around 65 with all the sort of headline alts trading on there. Your Stratuses, your Decreds, your Florins, which is a good tip actually, by the way, Florin coin, get on it. The bad side, or the negatives of Poloniex, it's terrible. They've got a terrible customer inquiries response rate. They're just, I don't know what they're doing, but to get verification for higher limits can take in excess of 2 months. Sometimes it's like shouting into a well over at Poloniex. You just get nothing out of them. You can get a basic limit of 2k a day set up pretty easily, but trying to get anything upwards of 50k a day takes a little bit more effort. You've got to really shake their tree. Also goes down pretty regularly and kicks you out when you're trying to trade. So it's fine if you're a price taker and you're just going in there quickly and getting out, but if you're a price maker looking to put some bids and offers in the market, then it creates a few dramas. So one of the drawbacks of the exchange, but all over it's not a bad one. Bittrex, around 500 million in daily trade volume, so really good liquidity. Probably my favourite platform. Very, very quick to respond to customer requests for higher levels of verification. You can get up to, I think it's about 100 Bitcoin daily transaction limit. And it takes less than a week, unlike Poloniex, which can take a few months. So again, a really good selection of both alts and majors, a few hundred, so you can get as crazy and as exotic as you like on Bittrex. Again, Tether and Ether pricing as well as Bitcoin, very strong liquidity as I mentioned before, and decent pricing similar to Poloniex without any deposit or withdrawal fees. It's not really that user friendly. But having said that, once you sort of work out how to navigate your way around the system and trade, it's a relatively good, stable platform with decent pricing. The third one we're going to have a look at here is Kraken. Smaller than both Bittrex and Poloniex, but still a fairly major player. 250 million a day. Again, it's enough for all of us here. Low trading fees, so as a price maker you'll be accepting about a 0.1% if you're putting bids and offers in the market. As a price taker you'll be getting clipped about 0.26% every time you trade. So they've also got a tiered system which is pretty cool, so that's where the pricing starts, and depending on the amount that you're putting through the system, the pricing actually improves as you run through the tiers. Very minimal deposit fees, globally based with strong customer support, up to 100k a day and 500k a month on verification, which is not huge, but it's better than Poloniex, and again, Kraken responds a lot quicker than Poloniex. They pretty much all do. Importantly, very strong security and 2FA enablement. All of them basically have 2FA. Two-factor authentication, which you should absolutely be enabling if you want to keep your funds safe and your trading secure. So the drawbacks of Kraken are that there are limited fiat on-ramps and, as I said before, a little bit slow to respond to inquiries. So they're the three that we wanted to go through tonight. Something else to consider at the moment is Bitfinex, a very popular site. It's really user-friendly and low fee, but some of us are a little bit worried about its future. I don't know if any of you heard, or probably most of you heard, they pulled out of the US saying that they're not going to provide exchange services in the US anymore. Their official reasoning was that it was based off the SEC findings that some of these ICOs had in fact issued securities. The story behind the story is that they actually lost their banking relationships with Wells Fargo in the States, and they had a lot of trouble putting in place any other replacement relationships. So there are people in the market that think that perhaps Bitfinex is struggling financially. I don't have any positions on there. I don't know, it's a bit of a wait and see type of a situation. There's even people that say that the recent rally in Bitcoin, or the start of August after the fork, the really strong move that we saw, obviously related to the fork, but there's people also that believe that part of it was buying interest out of Bitfinex because they pre-advised their larger investors of potential issues down the track. So for those investors to get off the site, they needed to dump their altcoins, buy Bitcoin and withdraw. So hence part of the reason potentially why the alts got belted in early August and Bitcoin shot through the roof. So something to keep in mind there anyway. Okay, just a couple of things to consider or to look at when you're trading anything out of Bitcoin and Ethereum. How do you decide if alts are a good investment? And further, how do you decide if it's good timing for the idea and the business model? It's also because it's obviously very important to the future success of that particular altcoin. So you've got two sides of the coin. One side, fundamentals. So what does the particular cryptocurrency do? Are they a payment rail like Ripple, for example? Are they a transactional currency, Mobile Go? Is it a supercomputing token like Golem, or capital markets like Veritasium? As I said, the timing of the business model is very important. I think something like Veritasium, while it's a really good idea, it might be a little bit advanced for most people to understand at the moment, peer-to-peer capital markets, whereas something like Salt Lending, straight up, very easy to understand business model, peer-to-peer lending, probably got a better chance of success in the market at this point. So other things to consider: who are the developers? Do they have a strong track record of successful projects? Is it a good technology? This is probably the most important factor to consider. What's the underlying value of the technology? What new and improved type of blockchain have they come up with, if any? And what are its broader applications in the wider market from a commercial perspective? Also looking at current market cap, high versus low. You can look at things like Golem, for example, which is about a 500 million market cap at the moment. There's another coin which does basically exactly the same as Golem, but it's slightly better, by the name of Elastic. Some of you have probably heard of it. Current market cap is around $25 to $30 million, so potential there for a pretty big move to close the gap on Golem, being a very similar technology. Is there enough liquidity in the market? Are you going to be able to get in and out without paying outrageous spreads? And also, really importantly, in this community, more so than other investor communities, what's the community think, or what are they saying about the particular technology? Looking at Reddit, Twitter, the Slack channels, looking for the general mood around individual technologies. And the last one there, very dangerous, fear of missing out, can cause you to make stupid decisions at times. Chase the highs, as Thomas was talking about, worrying about missing out on a 1,000% move when you can just be patient, sit a bid 20% lower after a strong move, and you're going to get in at a much better level. So moving across to technical analysis, a couple of things there. Is it an uptrend, downtrend? Price history, how does the price history look when you overlay technical analysis tools like Fibonacci retracements or extensions? Is it a good entry if I buy now? Am I buying the highs? Is it trending down? Is there an opportunity to scale in rather than just putting your whole wad at $100, for example? You might look to buy 10 units at $100, 10 units at 90, 10 units at 80, 10 units at 70. You average in and your average price falls as the market falls. But if it does bounce off 100, then at least you've got a small amount. So things like that to have a look at. Also, you need to look at what your targets are. Fibonacci extensions come in very handy. Trading plan as well. Am I buy and hold? Am I a day trader? I'm going to be chopping in and out all day. What are my stop loss levels? And also number of assets included in your portfolio and the best allocation. Too many assets just gets confusing and you end up throwing money all over town, and not a lot of them will end up being winners. So you need to restrict your trading activities with some sort of parameters. Basically, if you keep all these things in mind, you probably, you are going to have a greater chance of successful trading. We're back to Thomas here already. And that's what the trader mindset's about, which I'll have Thomas come back up and talk you through.
Awesome. So this is this really good slide here to have in consideration when you want to jump in or not. Some golden rules. Always trade support and resistance levels. Basic stuff. Always trade with your primary trend. Unless you are shorting Bitcoin, which I'm sure a lot of people have done it. I've done it a few times. But reality is that if you're trading altcoins with those percentage, then you're going long. You're not really shorting. So make sure that when you're buying a coin, you are actually in a bull market. Very important. Always have a trading plan. If you just buy something because someone told you to buy it, then man, you fall into a trap. You have no idea what you're doing. Matsei, always security, backups, 2FA. Have your master seed in a paper, in an encrypted USB, whatever. Same, never go all in a single trade. It's no point. Remember, you're running a marathon, you're not running a sprint. And never chase the hype. If people are selling, and you seeing it, you can feel it, you can see it everyone. Everyone is yelling about this coin and it's the best of the best, and you counterintuitive, like, maybe it's gone through a really big rise recently. So this is how traders think trading works. Entries is a big percentage, probably 40% or something. You have your indicators, right? And then you leave your stop loss, your exit, your trade management, and your risk management diminish. You don't even pay attention to it. You think it's super easy, right? Just buy and hold. There's some truth in that. I mean, there's some truth. Maybe if you buy, I know a lot of people, they don't have the mindset, they don't understand that this whole matrix thing. So, like especially I got my father-in-law, like he's a winemaker, right? So he just bought Bitcoin a year ago, and he's just been sitting on it, and he's probably not going to sell it until a couple more years. Then buy and hold makes sense, but if you want to be a trader, or you want to explore this area, then you cannot just be like the rest of the herd. You have to be more like this. This is how it actually works. Risk management, right? Big percent, trade management. That's pretty much half of it. There's another third, continuous improvement. You must continue to research. You must continue to do some charting, back test. When I say to you guys, I spend 3-4 hours a day, this is my full-time trading. Some days the best trade is no trade. Some days I'm just analyzing charts and setting up alarms so I can be prepared in advance. So I'm just working my plan. And yeah, what Matt say, you have to control your risk. You cannot go, the thing that happens most frequent that I see with people that have a one-on-one consultation is that they fall into the trap of having too many coins managing. I'm talking about 20 plus, 30 plus. I see people with 60 coins, with like micro, like penny stock mentality. Just understand that the more coins you are managing, the more risk management you have to think of. Imagine if the whole market is turned bear and then all the coins are losing 30%. Then you have to visit 60 different coins to close your position. That's a head fuck. Yes, so risk management, that's the most overlooked area on trading and in cryptocurrency markets. It's one of the areas that you have to put the most attention. I said you have to put the most attention because you always have to think what's the fall? I'm entering here. If I'm wrong, what's the fall? How much I'm falling? I'm gonna lose, I'm willing to lose 30% of my investment in a trade. So yeah, so this is just basic risk management, guys. Oh, sorry. Position sizing, right? People in commodities forex, they say never never bet more than 2 to 4% of your whole trading portfolio in a single trade. And yeah, it's just basically entry targets. What is my stop loss? If you enter somewhere, if you don't have a stop loss as soon as you buy a coin, then you do not have a trading plan. You are trading blindly, and I really don't wish that for everyone. Like, before I go to that, then yeah. So what I'm interested in is empowering people to be self-sufficient when taking decisions about trading. As a lot of people ask me to manage the money, guys, this is not what I do. I'm not a financial advisor, not a money manager. I'm interested with the ethics of cryptocurrency, that you are your own bank, you are your own financial entity, you are responsible for your wealth, your capital, so manage it. Take responsibility for it. So yeah, I'm really interested in empowering people. So I run workshops every month. They're all cryptocurrency, alternative currency related. There's one for beginners, where I teach people about how to use Bittrex. I use Bittrex personally as my preferred exchange. So yeah, there's a few dates there. That's my Facebook page, facebook.com/CryptoTraders101. All the events are there with price, contents of the workshops. They go at least the charting for crypto for beginners, it goes every 2 weeks. And the advanced trading and risk management, it goes once a month. They are limited for 10 people only because I need people to concentrate. So yeah, so if you're interested in that, you can visit there, message me on Facebook, or come talk to me afterwards. I'm very happy. And you can check the contents there. They're really good. I know we have talked a lot about different signals and tools, and it's a very short time for us to explain you this in detail. So, for example, the advanced trading goes about 4 hours. So yeah, it's a lot of information, and as I say, it's continuous research of yourself. So invest in yourself. If you are into cryptocurrencies, then invest in yourself, invest in your skills, keep charting, keep researching. You have to become a really good chartist and researcher. Yeah, so we're just going to open the space for Q&A. Is it working? Yeah. Or shirt.
That's all right, I can swap it over. Anyone got any questions? Down the front here.
Just go back to the exchange. So at the moment, what's the best way to move Australian dollar fiat into the exchange for trading? I've actually tried
Glad you asked.
Yeah.
Very easy. There's a really easy Australian exchange to use called acx.io. So you just you send Australian dollars from your bank account across to the ACX account. Clears normally within 24 hours. You can purchase Bitcoin on ACX and either leave it on there or take it off into cold storage, or you can send it across to any of the other exchanges to purchase altcoins from there. Very simple process.
I asked the question because I actually tried a few exchanges here and compare the size that they do sell Bitcoin here in Australia, for example, or spot CoinJar, sorry, and I tried BTC Net Markets. And there's always the spread compared to the Australian US dollar is very big. It's almost like 4%. So I'm actually asking, is there another better way to overcome that spread?
There's 0% trading fees on ACX, but there'll always be a spread between buy and sell.
Yeah, it just depends how much interest is in the market, because obviously the market's made up of people putting bids and offers in. There's some liquidity provided by the exchanges as well, but you're always going to be paying wider spreads than traditional currency markets. The best way to do it is, if you're not happy with the spread, put an order in and wait for your order to get filled inside the spread. I mean, you're risking not getting filled, but you're always going to have to pay some sort of spread. Yeah, it's not a cheap market to transact in, crypto markets, compared to other markets. That's you. Yep.
Hey, Matt and Thomas. Just a question. So for every position you take on in a trade, what's your maximum drawdown of your stop loss? Usually the rule is 1% of your whole portfolio, but that is not as reasonable given the volatility. So in your opinion, what do you guys do with that?
Can you repeat the question as well? Yeah?
Okay, the gentleman down the front's asking what sort of stop losses we put in place around trades. The general rule of thumb is that in traditional currency markets, you'll put in place something around 1/3 of the size of the gain that you're looking for with your top side target, which works quite well in those markets, given the fact that volatility in crypto markets is much higher. If you look at the average volatility, yearly volatility for the Australian dollar historically is about 13 to 14%. You look at the mid cap market participants in crypto, and you're looking at 32% monthly volatility. So the whole thing's really magnified. So while you might be still sticking to roughly 1/3, you're looking for much larger movements. So the dollar values can get a little bit scary, but yeah, I think the 1 to 3 rule of thumb is still a pretty good one to follow.
Yeah, I feel like I'm always risking between, honestly, like in every trade I'm risking 10 to 30%, which is a lot. But the rewards, like 1,000%, like if you look at it in perspective, yeah, but they're so strong, there's so much emotion in the markets that those sell off normally, and I've had back tests and they're like, yeah, like 30%. It's insane.
Over back.
You mentioned not holding too many coins at one time because it can be a bit of a task to manage them all. Is there a bit of a sweet spot to your recommendation on how many to kind of hold and manage? Is it 10, 15?
I think Thomas normally goes with about 12, don't you?
Yeah,
Around there.
12.
Yeah.
Yeah, I prefer less. It is so difficult, man. It is really difficult to concentrate. But then if you think it like you have to specialize. Like you can follow. That's what I tell everyone. You can follow 40 markets, but you participate in 10, 12 most. If not, it becomes really overwhelming.
Yeah, we're pretty similar with the fund. We're in 6 to 10 coins. A lot of coins in the market are very highly correlated as well. So it doesn't make a lot of sense to spread out amongst a whole bunch of coins that are very closely correlated. So you look for some divergence on those, and you try and keep your positions to a minimum in terms of the numbers that you're managing. Will.
Hi fellas, first I'll call up long time listener. Thanks for your presentation.
You're welcome, Wilbur.
Question for Thomas. What do you know about Cloakcoin?
Which one, sorry?
Cloak.
Cloakcoin, yeah. Cloakcoin is another top privacy coin. As you guys know, there's a few privacy coins. There's a whole market within cryptocurrency. So you get Monero, which is the most popular one, the one that has leading the developers and winning the race. And then you got Zcash, right? Which is have a more corporate sort of approach, but man, technology-wise, it's great. And then you got a few down the line, and one of them is a Cloakcoin, which has a low market cap. I'm heavy invested myself in that, and they're going to have a lot of releases. But in terms of codes, if you read the white papers, then the code that it's going to release is the most advanced in terms of encrypted anonymity when you are transacting coins, and that is something really important, I guess, for a lot of groups of people to keep the transactions anonymous. So Cloakcoin.
You're a frother on Cloakcoin, aren't you?
Yeah.
Massive.
Yeah. But it's a community. There's going to be an open source project coming later this month, and they're releasing their main software called Enigma, which is supposed to be one of the most advanced encrypted privacy coins. And the market cap is 20 million. You compare it with Monero, which is billion, a little bit less.
Yeah, I think 1.2.
And Zcash is worth 500 million. So then you have to think, what if the coin pulled from 20 million to 100 million? That's 5 times its value. So that's something that is realistic. You always have to think of yourself of like, is it realistic that a 500% move could happen in a company? I think Matt was pretty straightforward with that. So yeah, well, cloud it's promising.
Yes, once again as well, thank you for the presentation, very interesting. I like that you're constantly juggling between the technical aspect and the emotional, values, like, yeah, something new is happening. Besides the currencies you're already trading, I recently 10x'd on an ICO. What do you recommend with this? I mean, you gotta be into that as well. Like, talk about emotion.
What, 10x
Yeah,
itself?
No, 10x also 1,000%.
Ah, not the company.
Oh.
Okay.
It was actually 0x, so you might know that one too. But
You want to take it?
10x is great, isn't it?
Yeah.
I mean, I've not.
ICOs.
Well, ICOs.
Oh, the
yeah.
ICOs.
ICOs,
Okay,
just in
okay.
general, like ICOs, where you stand with this? Do you put, because you don't have any data,
Yeah.
obviously, so you gotta believe in the project somehow.
Yeah.
And
Definitely on a percentage of the portfolio. I mean, you have to be, that depends on your trading style, right? If you are an investor long term and you're willing to hold something for a year, maybe an ICO is something that is very attractive to me. For what is attractive to my trading style, if an ICO gets released into the market, you either have two options: either goes up or goes down. And sometimes it's more attractive to me to buy an ICO of half of the price in the market, knowing this and then trading from there up.
Yeah, it depends a little bit on the development pipeline as well. If you have a look at their roadmap and they're not, there might be a whole lot of hype around them, but when they hit the market, if there's not going to be any news for 3 months, 6 months, 12 months, there's one at the moment that's got a hell of a lot of hype around it that really, the guts of the project won't happen until 2019. Potential to fall flat after the hype. But again, you look at the underlying technology. If it's an improvement on current technology, you look at the teams behind them. You can analyse them on a pretty simple. I mean, obviously, you can't do any price analysis, but you can analyse the project on its merits. And as we all know, ICOs have been doing really well. A lot of them. Some of them have been falling flat. As Thomas said, I think some of the ones with the longer timelines, maybe you're better off waiting until after all the hype's died down, prices come off on market, and you might be able to pick it up. The other way that we like to pick up ICO opportunities is during early book build stage, so at pretty heavy discounts. If you have access to those sort of things, then obviously that's a huge factor in whether you're going to make any money out of it or not.
so they'll always be part of your portfolio.
Absolutely.
Absolutely,
We don't hold more than 30% of the portfolio in any individual ICO, just because the way the market's growing so quickly, and you have to tie up your funds in these ICOs, the timelines to return can be anywhere from sort of 6 weeks to 4 months. So to take any more than 30% of your portfolio off the table and set it aside into an uncertain future while the market's really screaming topside, not very smart. I mean, if you make 10x out of it, yeah, then
Awesome.
you triple your full portfolio
We
value.
agree on this
Yeah.
all the time.
Yeah, absolutely.
So I know you guys have touched a bit on chart analysis. Well, how much do you guys look at trading the order book, or do you guys look for spoofing or wash trading? Do you guys factor that into your consideration?
Spoof. Wash
Fake
trading.
orders that come in and bots and algos, you guys look at that, or you guys more on a long-term position?
Well, that's also on your portfolio management. For example, what is a long hold for you and a short? I have 3 coins that I hold for long term, and then I have a bunch of my percentage that I do short trades, right? Trades that last 2 weeks or not. Whether bots and whales are present in the markets, they always are.
Do you do that in your analysis? Like, do you watch the order book, or do you just?
Oh, absolutely. Yeah, the order book is another very strong signal. You have to see what's the buy pressure and sell pressure of the market. That's give you extra confirmation. Especially when you have a coin that is about to break a strong resistance level or going to all-time high with momentum. If you look at the order book just in that moment and you see that the buy pressure, there's people want to get into the market, and then you compare it to the sell pressure, then that's like, I call it the tsunami.
That's what I'm saying. How do you know it's not a spoof order?
Well, sometimes, yeah. Well, that's you never show. You never show.
It's very different to a banking order book. I don't know if you've ever sat on the order books in the capital markets in the banking sector, but the order books that the banks have firm confirmed orders that are going to get executed on regardless, unless the institution calls up and pulls them at the last minute, which pretty much never happens or very rarely. But yeah, there's absolutely there's the chance that people are just placing phantom orders into the market in crypto.
Well, how do you guys cope with that? I mean, you just deal with it kind of thing.
But we're not crying about it. It happens. I mean, yeah, something happens. Something is not a breakout, it's a fake out, and something's a massive sell-off. That's why stop losses, risk management, straight away. You have to be prepared for those scenarios always. Yeah.
Up the back.
Hey guys, what's your impression about regulations around the world, and especially in Australia? There is a bill that is about to be discussed in the Parliament at the end of this month. What's your call? Like, do you reckon there is a possibility that it's going to hit in Aussie when doing ICOs and exchanges in general? And does that mean that it will move into the decentralized exchanges instead of current structure that is used by majority of the crypto traders around the world? Like, what's your call?
Can you repeat the question for the mic?
Yeah, there are like 2-3 questions if you could sort of make
Yeah, so you're talking about the regulatory framework and what.
and then scale market.
Okay, well, obviously there's been recently a number of governments around the world that have moved initially in the ICO space to outlaw that. I don't think that's going to happen in Australia. The Australian government's fairly crypto friendly. Maybe you disagree with me, I don't know. We've recently spent a bit of time up in Canberra with the Blockchain Friends of Parliament group. So they're heavily engaged with the community and going to fairly great lengths to understand the opportunity that blockchain technology and digital currencies present for the Australian economy. And my feel is that we'll move. There's always a chance that we'll take a backward step before we make a forward step. But they're spending a lot of time on it, and they're not at this point doing anything rash. They're trying to engage with the community and address the actual issues. Yeah, I don't know if you've got anything else to add.
No.
You did one more question.
One more question, yeah.
Just a quick one. Do the traditional analysis tools and methods that you use hold up well during a fork?
Well, the gentleman at the back just asked if the technical analysis tools held up well during the fork, but the fork was pretty special. I mean, we all thought it was probably going to move to 4,000, I don't know, 4, 5, 6 weeks after the fork, not 3 days or 1 week or whatever it was. So those sort of moves, I don't know, they're tough if you're on the wrong side of them, but they're great if you're on the right side of them. But I think sometimes I mean, you can look at the FIB extensions and stuff like that, but they're pretty hard to fit into.
I think fundamentals are your strongest weapon when a fork happens, like Bitcoin Cash, right? Just get released into the market. What's the sentiment? People are saying, oh, I want to dump this stuff, you know? This controlled by the mines, I'm going to dump it. And people dumped it, and everyone was expecting to dump. And then as that happened, then you found a bottom, and then it came to a bit of a, like a rally. It was 0.2 of a Bitcoin at some point. It was crazy, right? Yeah, so Fibonacci extensions, or try to analyze more, like you don't have, even with as market gets released in the market, or a fork is also a new market, so you still have very little information about that, and because way more speculative and dangerous to trade. But trading forks is pretty fun. But, yeah.
Sorry, just before we wind up, I might just get Simon Harmon up here. He's running the trading competition on Friday night, 24-hour live trading.
Yeah, thanks for the great presentation, guys. Absolutely fantastic. Great Q&A as well. So my name's Simon, and you're all here because I hope that you have an interest in cryptocurrency trading. If you don't, I can't help you. The reason I'm up here is because on the Friday is the final part of the Block Party 1. We're running a 24-hour cryptocurrency trading tournament. First of its kind in the world. It's kind of like a LAN party or a hackathon, but for us guys, because we need something like that, I think. And girls. Very good point. So yeah, it starts on Friday at about 6 o'clock is the registration time. We'll be going overnight, but you don't have to stay there. You can go home and sleep, don't worry. And then on the following Saturday, if you participate, obviously you'll be there. But if you want to come check it out as well, it's happening over at the Blockchain Centre, which is just next door. By the way, we're also getting drinks there after all this is wrapped up right now. But we'll go over there. We're going to have a bit of a laugh. There's about 12 of us at the moment. We're hoping to get a lot more than that. So if you want to come and drop 100 times long on whatever your favourite altcoin happens to be, come on down. This will be a great space to do it. And even if you're not all that familiar with trading, if you're new to the space, there's going to be, I already know some of the people that have registered and they're pretty good traders. You might learn something. So I highly encourage you to come on down. It's called The Bull Pit and the website is thebullpit.cash. Remember the, people forget the. So thank you very much. I hope to see you there.
Okay, great, thank you. So we've just got a couple of community announcements and then we'll do the auction for the Trezor wallet. So if I can just ask Jason Lee to come up to the stage and tell us a little bit about Intersect Festival. What's Intersect all about, Jason?
Hi, I'd just like to let you all know that Australia's first and largest FinTech festival will be happening here right in our backyard at the Melbourne Convention Centre. So please log on to Intersect Festival, get on board. I'd like to also announce that the Blockchain Centre will be a strategic partner to Intersect Festival. We're working towards a potential night outs on blockchains besides a blockchain day itself. So mark that dates down, 27 October to 3rd November. I'm also handling international ticket sales with special rates. If you need a booth at the convention center, we're expecting at least 1,000 people from all across the world coming for Intersect Festival. So please do look it up and come to me if you're interested.
Also one other announcement?
Yeah, one more announcement. Masterclasses, very quick. If you really enjoyed these conversations today, we have the next level up right now for the cryptocurrency investing blockchain masterclass initial coin offering. If you just snap a photo of this URL here, you can check it during your free time. What happens is you pay $100. $20 will be in the form of Bitcoins. We'll give you a promo code to log into ACX, and there will be pizzas and beers. It will be from 6 to 8 p.m. We really want to make sure that you get educated here, and our commitment is all funds raised goes back to the Blockchain Centre. It costs money to rent this space, to have drinks next door. It's a way to support us and to support the community as well. And the Blockchain Centre t-shirts are here for sale as well for $30 if you'd like to support that. And we're looking for staff to hire. So if you know of developers, DevOps, or even a HR professional, the Blockchain Centre is looking to expand with Blockchain Global as a sponsor. So if you know folks doing this sort of things, come to us. Yeah.
Brilliant. Thanks, Jason. Cheers. Okay, great. So we're going to finish off with an auction of the Trezor hardware wallet. So do we have a Trezor hardware wallet I can hold up so we can see what it looks like? So they go for $150 retail. Can you pay using cryptocurrency? Do you accept Bitcoin? Or
we accept Bitcoin, yeah, but this is going straight to Big Umbrella. So.
Right, okay, yeah, fair enough. Okay, cool. But we could always convert it on ACX.
Yeah. We can take whatever.
Cool, easy. Nice one. So, excellent, because I don't carry much cash, but I might like to buy it. So, okay, cool. So, all right, cool. So, we'll start off the bidding with, say, $50. Would anyone like to bid $50? $50, yeah, we've got a few people. $60. $60.
60 over there.
70 over here. Oh, two people. 75. 80. Let's go to 100. $100. $100. 120. 120. Yeah. 140. 140. All the money goes to the big umbrella. We're hitting at 140. Okay, let's go to 150. This is the registered retail value. 150 Australian dollars. And what is it, a limited edition, right?
That is correct, yeah, it's the great, it's discontinued, so this is going to be worth probably some big money in the future. We got 150, we got 150 at the front.
So it could in itself be a store of value.
It could, that is exactly
so, okay, cool. It could go up along with the crypto on it, or it could go down. But yeah, who knows? So yeah, okay, we've got 150. Okay, 160, 160, 160. Well, I don't own one, so I think I should bid 160.
160?
160. Would that be okay? Anyone else? 170? 170? Oh, nice one. 170. Cool. Anyone else? 170? We'll call it once, 170. Call it twice, 170. Anyone for 175? 175. Okay, sold. Do you want to come up and get your treasure? Fantastic. Okay, nice one. Thanks very much. Thanks very much. Awesome. Brilliant. Okay. Fantastic. Thanks very much, the guys from Cornstock. That's awesome. Okay, that wraps up for tonight for the presentations. You're welcome to come back to the Blockchain Centre for some drinks and nibbles, and hope to see you at the Bull Pit crypto trading tournament on Friday. Okay. Thank you.